Hey everybody, it's Mark Pruitt with Strategic Estate Planning Services. I appreciate you being here. This is the first market update for the new year, January 2023. Lots of information coming down the pipe. I appreciate you taking a few moments just to listen and let us pull you up to speed. Let me give you some updates and some data first that I think would be good. Goldman Sachs, as an example, just reported their year-over-year earnings, and they are down 70%. Yes, you heard that right, 7-0. Amazon, Microsoft, other tech companies have also already laid off over 60,000 people. Amazon is also just announced, along with Microsoft today, another 18,000 being laid off from Amazon, another 10,000 being laid off from Microsoft. For Amazon, this is the largest layoff they've had in their 28-year history. We know on a positive note, inflation was over 9% in 2022. That is continuing to come down. My opinion is the Federal Reserve will continue to raise rates 50 basis points in January and potentially February. We think they will also raise rates, not exactly sure what yet, in March. So they're still walking up that hill. We're not done yet, but I'll give you another interesting fact is, people are being laid off and they don't have a lot of savings, and so they end up putting things on credit cards. Simply put, one of the stats that's interesting is that as of December, 46% of people that have credit cards are not able to pay them off at the end of the month. That's up 18% from last year. People are already beginning to shift and put things on credit. We actually monitor Visa and we also monitor MasterCard. And it's interesting to see that these numbers and people are beginning to put more and more on these cards, and that's not a good sign in my opinion. Home sales are also off 40% already. That's something that I feel like is important for you to know. Other stats that I want to make you aware of are the following. And here's what I want you to really focus on, is that from the third quarter to the fourth quarter, these things have come down. And that's not good in our opinion. Is things such as GDP was at 3.2%. It's now, fourth quarter came in, and it's at 2.9. That's gross domestic product. And it's down. Another one, consumer spending, what I've got here in front of me, which is 68% of all GDP. That came in third quarter at 2.3, fourth quarter is at 2.1. It's down. Personal consumption in the third quarter was at 4.8. You go to the fourth quarter, it's at 3.9, which is also down. Building permits in December alone were down 30%. New starts for new builds were down 20%. S&P 500 with 20% reporting already are tracking at a loss of 3%. And lastly, retail sales in December were down. So what's the key word in all of this? Once again, all of these were down in the fourth quarter compared to the third quarter, which means the economy overall is continuing to shrink as people spend less and less. So I'm just trying to give you an idea of the lay of the land in regards to what's coming, because if you remember, I told you last year and all of 2022 that inflation and interest rates were going to continue to go up that hill. We're still going up that hill right now, but not as aggressively as the Federal Reserve was before. So that's what I called the first wave. The second wave is profits of companies, so corporate profits. As people begin to pull back and spend less, they start tightening their belt. They start putting things on credit because they don't have the funds necessarily to pay their bills off at the end of the month. They're not even paying their credit cards off at the end of the month based on the stat I gave you earlier. All of that matters in regards to the second wave, which is corporate profits. I do not believe that that's going to be the case for the entire year. My opinion is that it's going to be for the first and for the second quarter of this year. I do feel like that the third and the fourth quarter will be more positive and that things will begin to move in more of a positive direction, but not until then. And that's something we have to be ready. So we're continuing to take a risk-averse approach on assets. Now, A lot of people, I can tell you, they go, well, what should we do? Should we sell everything? Should we just go to the sideline? It's interesting, we did a market update the other day and someone in our audience asked, or I actually asked the question, I said, what is something we can do when markets begin to go down and begin to go on sale? And a young lady raised her hand and she said, begin to buy. And that's exactly what I mentioned to you last year in the December update of 2022, that as markets begin to go down in the first quarter and part of that second quarter, those things are going to go on sale. We're going to begin to go down and begin to buy as those markets go on sale more. Now, keep in mind, one of the things I continue to tell you is don't just think of just your market assets. You've heard me say this all last year. If you've got annuities, you have money that is not in the market. If you have money in the bank, you have money that's not in the market. If you have money in the markets, that's what we have to look at and that's what we have to monitor. We'll continue to do that. Whenever you have to draw income for you at retirement, I'm looking at all of it. I'm not looking at one bucket. I'm looking at all of your buckets, because that's what we have to create income off of, is all of the buckets in the end. And that's important to remember. We also have to look at the long term. If you're still working, as an example, you've got time to recover and you've got time to do that. So keep those things in mind. So feel free to pass this on to others if they're not sure what to do. That way, when the market does turn in the third and the fourth quarter, which is what we feel like it will do, there's no guarantees. I mean, could that change tomorrow? Yes, it could. But right now, we're still feeling and looking like there's going to be a good third and a good fourth quarter. If you've got any questions at all, don't hesitate. Feel free to give us a call. We'll be more than happy to give you more detail. If you've already scheduled your review, I can tell you thank you for doing that. We certainly appreciate it. If you have not, if you would please call Laura at 1-800-381-8870. And we'll be more than happy to get you scheduled with either Lamar, Stephen, or myself. Our goal is to get those reviews done at the end of January and at the latest by the end of February, between all of us. Thank you guys. God bless you. Happy 2023. Look forward to talking with you and seeing you soon. God bless.